What's up, weirdos? What's going on, guys? How the heck are you today? All right, let's get into the chart. I got some good stuff to show you today, guys. Now, I'm going to break down for you why the bull run's not over and when I think it will be over, okay? We're going to break that down for you. So, what's going on? It's a good day to have a good day, guys. I'm feeling good. I'm feeling great. Did day 8 of our DCA portfolio structure course today. That was good. Candyman, what's up, buddy? My neighbor yelled so loud at her kids last night that even I brushed my teeth and went to bed. Yep, the arsehole puckered right up, and I said, sir, yes, sir. Let's go, baby. Absolutely. Ramona says, happy Friday, almost wealthy weirdos. Don't forget to hit the like and subscribe. And if you're not on the Patreon, I don't know what you're doing with your life. Absolutely. I agree, man. I agree with that. Join the community, guys. You're definitely missing the boat. Okay, let's get into it here. What do we got? Daryl says, buy the dips. William, good to see you, buddy. Good to see you. Jake the Snake says, dip the buys. Yes. Scratch that. Reverse it. Let's go. H. Barbarina in the house. What's going on, man? Good to see you. John, blessings, my friend. Super fantastic. What do we got? Hey, Rob, I'm following those portfolio videos each day. Please keep going. Hey, absolutely, man. We ain't stopping for nothing, man. We ain't stopping for nothing. Paul, good to see you, buddy. It's me, Mario. Good afternoon, loose necks. Let's get this moolah. All right, guys, make sure you hit the like and subscribe on the way in. We got 104 people watching. We got 26 likes. Not bad, but we can do better. We can get to 100. Meredith, my dude, what's up, buddy? When you see the 24-hour or the 24 volume on the coin in bubbles like XYO, the volume is 16 million. Is that buying and selling pressure or buying volume? It's volume is volume. It's volume is money flowing through the project, whether it's buying or selling, right? So what I would recommend if you want to know whether it's selling pressure or buying pressure, go to CoinGlass and look it up over there. Lord of the Realm, what's going on, buddy? Good afternoon. Good to see you. Much love, my guy. Good to see you. Ray says, let's go. Show your support, subscribing, and smashing the like button. Absolutely. Easy says 97% chance. So you're saying there's a chance. Oh House says, I've come to peace that I have no more dry powder. I have given everything I can, 15 years of savings, chips, all in. Can't wait for your sell points. Absolutely, man. Absolutely. Listen, I got something I'm going to show you guys today. I'm pretty excited about showing it to you because we haven't gone over it a whole bunch, but we're going to today on the charts. Marcus, your most conservative price for Swiftcoin this bull run. My most conservative? I don't know, 3 cents conservatively? My most conservative? Strawberry Dragon in the house. Beebs, my dude, what's happening? There she is. The one and only Gamma Goddess. Let's get this money. Ditto says, been buying well every day for about a month. Nice. There you go, brother. There you go. First Pokemon of the day. I dig it. Over the top. What's going on? Ramona says, your jokes make my day. It makes me happy you had them. Absolutely. Absolutely. Candyman always brightening up our day with his comedy. Jake the Sink says, Crypto Mama, we miss you on the Chaos streams. Dave, what's up, man? Let's go, baby. Absolutely. Crypto Dad came back while you have been gone, and he actually brought milk. There you go. JJ, the live on the Patreon last night with Rue and Max was awesome. Hey, absolutely. Absolutely. It was fire. I agree. Fantastic. I'm looking forward to tomorrow, guys, by the way, 6 p.m. Central, the second episode of Blockchain Buzz with special guests. You're going to want to be there. Who are the special guests this week? Going to have to tune in to see which YouTubers are joining us for Blockchain Buzz Saturdays at 6 p.m. Central. So I'm excited about it. Adam, what's up, buddy? Good to see you. Ari's in the house. Carlitos, Rob, you think Swift can still hit through? Yes, I do. Yes, I do. Wow, we're all caught up in the chat. What do we got? 125 people watching, and we have 31 likes. Let's push it to 100, guys. Let's push it to 100. All right, let's get into the news. Bitcoin sitting right at resistance again. 110,580 is resistance. We got to get above and close above. Last night we got above 112, just a little above, but fell back down below. So we're waiting for that break above, but I think we're going down before we go up. And I'm going to show you why, and I'm going to tell you where I think we're going as well, right? So let's get into that first. Let's pull up the chart. Okay, guys. So what you're looking at here is Bitcoin on the weekly time frame, okay? Now, the reason people who know charting and people who've been around crypto for a long time, the reason we know that the bull run's not over, one of the metrics that we use to indicate it, right, is what you're seeing in front of you right now. This is very, very important, okay? So I hope you're paying attention. Clip it if you need to and save it. So this green line here, all right, this green one up here, that is the 50-day moving average, okay? Now, why is that moving average important? Well, as you can see on the weekly time frame, every time we hit it, we get a massive move to the upside. Here we are here, right? We bounced off it here. We had a move up. Bitcoin went up 196%, okay? That was in October of 2023, okay? Then what did we do? We came back down. We touched the 50-day again right here. And then we had another violent move to the upside for Bitcoin, another 198% move to the upside on Bitcoin when we hit the 50-day, right? Over the course of 112 days, okay? Then what did we do? We came back down, we hit it again right here. And when we hit it again, we peaked at another 69.64% to the upside for Bitcoin. So as you can see, every time we bounce off the 50-day, we move violently to the upside, right? Every time. Boom, touch it, boom, boom. And as you can see, here we are right now. We're getting ready to touch it again, okay? We haven't technically touched it yet. That's what she said. But I believe what we're going to see is a move down, okay? A move down to the 50-day to touch it, bounce off of it like we have every time, and then we're going to see another monster move to the upside, okay? So in order to touch it, where does it have to go? Well, Bitcoin has to drop down this week, right? I say this week because next week, as we move forward, because we're on the weekly time frame, next week, the 50-day will be higher than it is this week, right? Because every week that Bitcoin's price is above it, every week that passes, it moves up a little bit. That's what the moving averages do. Same thing below. When it's below it, it moves lower, right? So in saying that, it's going to come back down, in my opinion, touch the 50-day, which is currently at $102,395. Block me here. Okay, sure, Ken and Lisa, sure. Bye. So anyway, coming down, so that would mean that Bitcoin's going to come down to around this week, around 102,394, 395, right? So that would mean a pretty significant move to the downside from 110. That'd be about an $8,000 move to the downside for Bitcoin. However, what I would say is this: if we don't do it this week, well, next week the 50-day will move up to probably around $103,000, $104,000, right? Which would put us right into the golden pocket where the CME gap was that we just filled. So a double bottom there would be great, right? So I hope you guys are following this. I hope you're understanding what I'm saying, right? A move to the 50-day is likely to happen here, okay? And a bounce, just like we saw here, just like we saw here, just like we saw down here, and then a massive move to the upside following it, okay? Now, when will I be bearish, right? When will I be bearish? Well, I will be bearish, as you can see. Let's go back, let's follow it, okay? When have we fallen below the 50-day? Right here, look at this. Right here, we fell below it, right? And what was that? Well, that was the bear market, as you can see, right? We were falling down into a bear market. January of 2022, we worked our way down into a bear market, and we finally got back above the 50-day right around here, around March of 2023. We were coming out of the bear market, right? So we fell below the 50-day, which pulled us into a bear market for confirmation, okay? So let's go back. That's the last cycle. That's the cycle that just passed. But we're not done. Let's continue. When was the time before that we went below it? Well, that would be, let's zoom in. The cycle before that, before the previous one, the 2017 cycle, what happened? Right? We dropped below the 50-day right here. And what was that? That was the 2017, 2018 bear market. And we started coming out of it right here in 2019, which sent us up to the parabolic phase of that bull run, okay? So what I'm trying to show you guys here is that whenever we lose the 50-day moving average on the weekly time frame, that is when we generally drop into a bear market, okay? As per every cycle up to this point. Right now, we are not below the 50-day moving average. So anyone saying that we're in a bear market or going into a bear market, no, we're not, right? Every time we bounce off of it, we move sharply to the upside. Now, what would cause me, I think the answer is obvious at this point, what would cause me to say, okay, we might be moving into a bear market now. We may have topped. Well, obviously, that would take us moving and closing weekly candles below the 50-day moving average. That would cause me to say, okay, we're probably in a bear market or we're going into a bear market, right? But we're not below that point. We're just coming down for a bounce off the 50-day again. And I have no doubt that we're about to see the same thing that we saw here. Massive move up, test, massive move up, test, massive move up. I think we're doing the same thing again. Test, massive move up. That's going to be your move. So you're going to see a move down to that 102,396, or next week it'll be a little bit higher, 103,000, 104,000, right? So you're going to see that dip to the moving average, followed by that big move up somewhere around 140 to 150 $1,000 on Bitcoin. That's how I think things are going to be playing out here, okay? That's why I know we're not in a bear market. So I hope that explains a lot to you guys, right? What do we have here? Cody, thank you so much, brother, for the super sticker and the super chat. He says, smash that like button, and Cody has become a member. My dude, Cody, always supporting the channel. I appreciate you, brother. Thank you so much. Crypto J505, what's going on? We all understand, Ramona, you've been doing full-time jobs. Yes, Ramona is like busy. Absolutely. All right, so there you go, guys. I'll probably talk about it again in a video because I know not everyone watches all the live streams, but as long as we're still above the 50-day moving average, we're fine, right? It's when we start closing daily and weekly candles below there, that's when it's like, okay, you know what? We might be in some trouble here. We might be going into a bear market. Candyman says, me pre-bull run, the zero in my bank account, viewing houses worth 10 million and being like, no, I don't like the kitchen. No kidding. Carlito says, you're the best, brother. I've learned so much from you and the Patreon. Hey, absolutely, man. Absolutely, brother. That's what we're here to do. We're here to educate and entertain. The problem is not everybody is not capable of being educated, right? Like that Ken and Lisa. They're not capable of being educated, right? They think that YouTubers control the market. And at this point, if you're under the impression that some individual controls the direction of the market, if you can't understand simple concepts about how the market moves, if you can't comprehend that on a daily basis, the sentiment and macroeconomic situation affects the markets, you might not be suited to be investing not only in crypto, but in anything at all, because these are simple, basic concepts you need to be able to grasp. And if you don't get, again, that, tariffs might affect the markets, not just crypto, but the stock market and everything else. If you can't understand that a tweet from the president can shift markets, that things that happen in the Middle East that I can't talk about can shift markets. If you can't grasp that those macroeconomic factors decide the direction and flow of the markets on a daily basis, it's not a good idea to be investing at all, because you don't even have the basic common sense constructs conceivable in your mind, right? So EZ says, thank you for zooming out. Notice this week, the 3-day and the weekly chart looks bullish. Yes. Quinn, what's up, buddy? Good to see you, man. Okay, let's continue on with some of the news. I wanted to do a follow-up piece on the whole Fetch AI Ocean protocol situation. So Fetch AI and Ocean, a near settlement over $120 million token dispute. If you don't know, I covered this a couple of days ago, guys. There's a dispute over the Ocean protocol CEO being accused of, in a greasy way, accumulating some tokens, fetch tokens, before or during the time of the consolidation of the three companies, right? The Artificial Superintelligence Alliance or whatever. DL says, do you believe in the extended cycle yet, or still the 4-year cycle? Well, for me, technically the 4-year cycle is not debunked until the end of November. If Bitcoin has not topped by the end of November, middle of December, then the 4-year cycle would be extended at that point. Yes. Maybe investing in retiring at 90 years old. Yeah, exactly. So let's get into this a little bit. Fetch AI and Ocean Protocol are nearing a resolution to their dispute over $120 million in tokens. Fetch AI CEO said he will drop all legal claims if Ocean Protocol returns the 286 million FET tokens from their past merger. He said during the LiveX talk that he will soon send a legal proposal to Ocean Protocol. Over 5,000 people listened as he explained how he wants to rebuild trust in the Fetch AI community. Fetch AI CEO stated that he aims to resolve the matter peacefully with Ocean Protocol through open discussion and a written agreement, rather than resorting to court proceedings and incurring significant time and financial costs, not to mention the loss of faith that the community would have in the project as well. He told listeners that the company prioritized maintaining the trust of thousands of community members who believed in the project's long-term vision. He went ahead and promised Ocean Protocol that his company would drop all legal claims and stop any lawsuit connected to the dispute immediately. But for this to happen, Ocean Protocol has to return the 286 million FET tokens. To sweeten the deal, the CEO stated that FET AI would cover all legal costs necessary to finalize the agreement. "You can have my letter tomorrow," he said. "The offer is simple. Give my community back the tokens. I will drop every legal claim." He also stated that Fetch AI aims to repair its relationship with Ocean Protocol and ensure its community feels safe and respected once again. He wanted both companies to focus on innovation instead of engaging in public disputes, as each had worked hard to establish a reputation for itself. A validator node called geostaking has been facilitating communication between the two teams and stated that Ocean Protocol would agree to return the tokens once it receives an official written proposal. He responded and said the document is in the works and could even be sent by Friday, which is today. The dispute between Fetch AI and Ocean Protocol began months ago and has only worsened since a joint project called the Artificial Superintelligence failed. The project united Fetch AI, Ocean Protocol, and SingularityNet to build a stronger AI ecosystem. However, problems emerged immediately after the merger announcement. According to reports, the team disagreed on management, and Shika even called out Ocean Protocol for mishandling funds connected to the alliance. He stated that their actions caused the value of Fetch AI's ETF token to decline. We have an ad. Ocean Protocol denied any claim of wrongdoing and said it was responsible throughout the merger's process. But data from blockchain analytics firm Bubble Maps indicated otherwise. According to the reports, a multi-signature wallet linked to Ocean Protocol converted around 661 million Ocean tokens into 286 million FET tokens, about $120 million worth at that time. The data also indicated that 160 million of those tokens were sent to Binance and another 109 million to GSR markets. These massive movements raised a lot of eyebrows in the community, and people started accusing Ocean Protocol of secretly selling the tokens. The controversy deepened when Ocean Protocol withdrew from the Artificial Superintelligence Alliance on October 9th without explaining the large transfers. The company's withdrawal caused the price of Fetch token to drop from $3.22 to about 26 cents, 93% drop. Oof! As a result, investors and community members blame Ocean Protocol, but the company denied all allegations. Ocean Protocol published a blog post on Thursday where its founder, Bruce Pond, directly addressed the accusations made by Fetch AI's CEO. He stated that Ocean Protocol was not responsible for the decline in the price and the FET token, and attributed it to the broader crypto market and liquidity issues. As per his words, the 93% drop was due to broader market sentiment and volatility. That is a load of crap. That is a load of crap. Blaming the market volatility for a 93% drop is crap. If it was a 30% drop, a 40% drop or something, I'd say, okay, yeah. 93% drop that happened coincidentally the day after Ocean Protocol declared they were leaving the merger. That's not because of market volatility. That's because of you, bro. Right? Pond went further and accused the Fetch AI and Singularity Net of draining liquidity from the entire community. He claimed they sold more than $500 million worth of FET token, which he said caused panic among investors. The founder also defended his company's decision to leave the ASI alliance. He said Ocean Protocol could not, in good conscience, be part of a project that no longer aligned with its values or financial principles. Industry analysts suggest that both companies should resolve this issue peacefully to regain investor confidence and refocus on innovation rather than engaging in a fight. Here's my stance on it, guys. At this point, I think it's a little bit too late for them to repair market sentiment on their projects as individuals as the Superintelligence Alliance. I think that they'd be better off kind of going their own ways. Personally, I think Ocean Protocol should kind of... Plus, whenever you have this kind of a business/personal issue professionally, it's really hard to kind of unburn that bridge, right? You can never go back. Some things can't be unsaid and some things can't be unheard, right? So I don't know. I think it's a mess that can't be cleaned up, but I could be wrong. JW says ICP, XCN, ATH, SPA, CELR, and Cardano. Nice. There's a star-studded lineup for you. I'd buy that for $1. Let's get it. Let's get it. Okay, we got another article to get into here. Fed rate cut odds jumped to 97% as CPI comes in cool at 3%. Is this bullish for Bitcoin? Modern Home Building Center. All right, someone's calling me anyway. The United States Consumer Price Index rose to 3%. I gotta turn my ringer off. Sorry, guys. Year over year in September, coming in below economists' expectations of 3.1%. End marketing for the first time inflation had reached over or exceeded 3% since January. The cooler than expected reading came as a shock, with odds of a 25 basis point Federal Reserve rate cut in October surging to 97% on Polymarket immediately after the data release. In September, the September inflation uptick was driven primarily by rising gas and food prices, with tariffs also contributing, according to market observers. However, the monthly increase of just 0.3% came in well below the projected 0.4%. In comparison, core CPI excluded food and energy, moderated slightly to 3% annually, with a monthly gain of only 0.2% versus expectation of a 0.3%. Drew, the next rate cut will be on the 29th, so 5 days next week. Speaking with Crypto News, Farzam, co-founder and CEO of VAIL, explained how the macroeconomic environment could benefit Bitcoin moving forward. Said, should the US CPI print come out soft, which it did, blah, blah, blah. However, he cautioned that Bitcoin's path higher is not guaranteed given its hybrid nature as both a store of value and a risk asset. No problem, Drew. I got your back, brother. So basically, to sum up the article, guys, we are we are going to see a rate cut next week. The 29th, I believe, is the date that Powell is speaking. And there is, as of right now, a 77% chance of 2 more rate cuts after this one, once in November, once in December. So very, very big things coming, possible catalysts, guys, moving forward. Let's go to Squawk Box for more on rate cuts. We got Fed rate cuts will worsen the stagflation situation 6 to 12 months from now.
3 yields are sitting, the 10 years right at 4%, the 2 years just below 3.5%. And this is ahead of that delayed CPI inflation data that we're going to be getting later this morning. That's all coming ahead of the Fed's policy meeting next week. And joining us right now to talk about it is Kamal Srikumar. He is the president of Srikumar Global Strategies. Sri, let's run this through. These are pretty big numbers. We've been waiting more than 3 weeks to get them. It's the only data for a data-starved market that's watching for these things. What's your expectation of what we'll see?
What the expectation is that for the first time in a long while, the headline CPI, Becky, is going to cross the 3% level. It'll come out at 3.1%, which is again a threshold which we have crossed. Inflation is clearly in recent months on the way up. Whether you think it is rising fast enough or slowly, it is going up. The Fed has cut interest rates. It's going to cut interest rates again next week. The thing that bothers me is this is supposed to be a data-dependent Fed, but they act without any data, and they make it up as they go along. They just assume if they don't have the data, this is what we think it is, employment is weakening. Where did you get the idea that employment is weakening? There are no numbers.
Well, they will tell you that they have got it from the CEOs that they're talking to, from each of the Fed regional banks, the people that they talk to along those lines. They will tell you that it looks like the economy or the jobs market is softening from that perspective.
But if you look at that, and there is a New York Fed report which just came out, which says at the same time that consumers are worried about rising inflation expectations. In other words, they are worried about stagflation. Mm-hmm. So if that is the case, if you're going to be cutting interest rates as the Fed is doing, it is going to worsen the situation, say 6 months or 12 months from today.
What can the Fed do in a stagflationary environment?
It can do, only thing that it can do is what was done during 1981 to 83. Hike up interest rates to extremely high levels, choke the economy, remove inflation out of the system, and then put the economy back on a steady path.
So in other words, the Fed, you think, really should only focus on the one mandate, and that's
exactly.
Inflation. Forget about the jobs.
That's what I have said on your program.
That was the belief of Alan Greenspan.
Right. That is why you need for the Fed to focus on inflation, leave it to the U.S. Treasury to worry about economic growth and employment.
As you mentioned, that is probably not going to be what the Fed does. They are very likely going to cut rates again. Jay Powell himself spoke during the pandemic about how worried he was about the jobs market, how that really stuck with him. He would go by some of those encampments down by the Fed, see people who were out of work, and worry about the Hooverville potential for impacts. How much do you think that this is the Fed really worried about the labor market? How much do you think, if any, there is political pressure that plays into this when you have a president who is very outspoken about thinking that the Fed is way behind when it comes to cutting?
The pressure is having its impact first. And even though Jerome Powell is going to leave the chairmanship next May, there are people in his board of governors who would like to succeed him. And they would like to please the president by talking about cutting interest rates. There are people outside the Fed who are looking for the job as well. So clearly, there is an essential conflict right now going on with the forecast not purely based on inflation expectations, but their own career goals are coming into it. That's what I think we are paying a price for today.
You don't think anyone on the Fed who votes to cut rates or who says that we should see rates cut by 50 basis points instead of 25 basis points is doing it for anything other than for boosting their own career?
I'm not saying that is the only motivation.
That's what he implied.
If there is anything else that is being said, I don't see what it is. For instance,
this is a problem. Just because he doesn't understand someone else's position doesn't necessarily mean that the only logical explanation for them thinking there should be a rate cut is for their career path, right? Like, too many people in today's world think that they're just right about everything, and there's no possible reality where there's other reasons why they might feel that a rate cut's possible. If they don't agree with him, then it must be because it's career ambitions, not because of the fact that they truly believe there should be a rate cut, right? It's asinine.
The latest addition to the Fed Board of Governors, Stephen Moran, for instance, has made a statement that inflation is going to go down with tariffs. And that's why he wants the interest rates to be cut. but no economist substantiates or supports that point of view. So you can have a different point of view rather than just your career objective. But if it is not something supported by economic theory or the other people at all.
Again, just going back to what is really the case is the Fed does have a dual mandate, and worrying about what's happening with the employment picture. Anecdotally, you can point to things, you can hear what you've heard from CEOs, and maybe they're not laying off a lot of people right now, but they're certainly not hiring. And it seems like this is a job creators market at this point, not the job seekers market.
That's a very good point. Let's take that up. If you have jobs which are not being created at a fast enough pace, you need structural changes. Tariffs are worrying a number of American businesses. They cannot hire when they don't know what the tariff is going to be. For instance, we thought the US-Canada situation was solved.
Right.
Last night, we realized it is not solved.
Right.
US-China seems to be heading for a resolution before the November 1st deadline for massive tariffs. But how long will it last? A month later, you may be back to the drawing board. Under that situation, you're not going to hire new workers. And no matter how much interest rates are reduced, you're not going to hire workers. So there are few things which are structural, and people make a big deal about monetary policy as if it can achieve everything. Yeah. It cannot. I come from a school which says monetary policy can only deal with inflation. And if you misuse it, you will create other problems. For instance, Powell has talked repeatedly about inflation being very high in 2021, that it was temporary, transitory, and he made a mistake. Last year, September to December, he cut interest rates by 1%, saying inflation is over, unemployment is the problem. Turned out he was wrong again. But the Fed never listens. That is why I think there are going to be more credit or banking-related cockroaches which are going to come out of the system, as Jamie Dimon would say.
As Jamie Dimon would say. Scarface, there are those cockroaches. There are those cockroaches. All right, let's keep it rolling along here, guys. A quick little notification, guys. If you are on the Patreon, just so you know, I am doing a video, 2 videos for you guys, walking you through how to create an account on Junction Link and how to create an account to make your personal data locker. I will be creating my own on video for you guys, walking you through how to do that. That's for the Patreon only, though. So if you're not a Patreon member, you will not benefit from the training on how to do that and how to make that passive income through Junction's and Jasmy's personal data locker. Tom Lee predicts significant drop in Bitcoin price. Tom Lee, co-founder of Fundstrat Global Advisors, warns of a potential 50% Bitcoin price drop and predicts a longer market cycle. Sharing his views in a recent interview, these insights could impact market sentiment and introduce heightened volatility, especially given historical patterns linking equity market fluctuations with Bitcoin pricing. Key developments, impacts, and reactions. Tom Lee, a respected figure in cryptocurrency analysis, recently commented on the possible implications of a significant drop in both the stock market and Bitcoin. He suggests a correlation where Bitcoin could experience a proportionate decline in response to stock market movements. Immediate ripple effects from Tom Lee's remarks include potential recalibration in trading strategies amid a possible deviation from Bitcoin's historical cycle pattern. This change might affect how investors view risk management and investment timing in digital assets. Now, every time I tell everybody that Bitcoin will go into a bear market, they get mad. But it was like that in 2021 as well, right? Whenever you tell people, listen, Bitcoin's probably falling 65, 70% in the bear market, people get angry. Oh, there's no more bear markets ever. It's just always up now, right? Does it feel always up now? Right? The market reaction includes discussions among analysts and traders about adapting to a potential prolonged shift in Bitcoin cycle. Sorry, I'm tongue-tied here. Influential community figures have acknowledged the complexity of these forecasts, debating their feasibility given past market performances. Yes, Bitcoin will go into a bear market, in my opinion, just a matter of when. For me, 2027 is going to be a year of red. That's just my opinion, not just in crypto, but in stocks, in precious metals. Cash is where you're going to want to be by that time. Again, it's not financial advice. I'm only here to entertain and educate you. But I'm going to be in cash at that time so that I can start buying up everything. Spot ETF volatility hits Bitcoin and Ethereum markets. Jake the Snake says, also, shout out to Gamma Ritas that might be made this evening. Yes. Oh, there's going to be some Gamma Ritas made tonight on the open mic night. Spot Bitcoin ETFs witnessed net inflows of approximately $20.3 million yesterday, while Ethereum ETFs faced substantial outflows near $145.7 million, driven by macroeconomic uncertainty and institutional repositioning. These ETFs movements underscore growing volatility influenced by macroeconomic factors, impacting institutional strategies and market prices, with Bitcoin and Ethereum experiencing notable declines due to risk-off sentiment. The cryptocurrency market encountered volatility as spot Bitcoin and Ethereum ETFs saw contrasting flows, Bitcoin registering net inflows and Ethereum experiencing significant net outflows. Key players such as BlackRock and Fidelity are the major issuers involved. BlackRock's IBIT recorded $100.65 million in outflows. Macroeconomic uncertainty and institutional shifts were the primary influences on these fund flows. These fund movements have affected investor sentiment, with Bitcoin price declining 2.96% to $108,000, causing ripple effects in the market. Ethereum's price dropped 4.55%, highlighting the sensitivity of global economic conditions. The financial impacts reflecting heightened uncertainty from ongoing U.S.-China tensions and Federal Reserve policy directions. The scenario underscores the ongoing vulnerability of cryptocurrency markets to larger macroeconomic events. The volatility poses risks to investors and prompts institutional reassessment. Large holders may view this as a potential accumulation opportunity, reflecting historical patterns of resilience in the face of macro challenges. Benjamin, what's up, buddy? Beebs, good to see you. Happy Friday, man. Enjoyed the episode last evening. Yes, last night was absolute fire on the live stream over on the Patreon. Absolutely. We got one more to get into before we go back over to Squawk Box. Let's get into it. Crypto.com is now seeking a banking license in major regulatory expansion, which you know they will likely get due to their business ties with World Liberty Financial and the Trump administration. The charter would effectively allow Crypto.com to operate under the same framework as national banks, so the same application that like Coinbase and Ripple are also applying for, which we actually covered in last night's Patreon live stream with Rule Black and Maximus Crypto. Offering institutional client custody and treasury services within the federal supervised structure. This includes managing digital assets, ETFs, and staking products across multiple blockchains, most notably its in-house Kronos network. Chief Executive Chris, we're just going to call him Chris, said the decision reflects a long-term strategy to align with traditional finance. Building trust has always been in the heart of our mission, he explained, noting that the firm's ultimate goal is to make crypto as reliable and transparent as the banking sector itself. Crypto.com already operates the Crypto.com Custody Trust Company, or CCTC, under New Hampshire state oversight. The new application will not replace the structure, but rather complement it, allowing the company to function as both the state and federal on both state and federal levels. The dual model could position Crypto.com as a rare bridge between decentralized technology and U.S. regulatory standards. Industry analysts say this is more than a compliance move, it's an attempt to future-proof the company. As Washington debates the long-awaited crypto market structure bill, firms are racing to secure federal approval ahead of regulatory consolidation. Crypto.com is not alone in pursuing this strategy. Both Ripple and Circle, which I alluded to earlier, major players in cross-border payments and stablecoins, have filed for similar federal charters as part of the shift towards tighter integration with the U.S. banking framework. Coinbase has also taken early steps to obtain a national license, signaling a broad trend towards regulatory normalization. By pursuing this route, leading crypto firms are acknowledging that the next era of growth will depend not on regulatory avoidance, but on regulatory adoption. Federal oversight could open doors to managing large-scale institutional capital and serving as qualified custodians for investment funds. If approval, Crypto.com would gain the ability to offer federal-backed custody, something long sought after in corporate treasuries, pension funds, and ETF issuers, weary of the fragmented state-by-state oversight currently governing the crypto sector. The move also reflects a broader political shift. Under the Trump administration, regulators have signaled willingness to integrate digital assets into existing banking laws rather than treat them as a separate speculative niche. Crypto.com's bid may take months to process, but its intent is clear. The company wants to evolve from exchange into a full-fledged financial institution. Not financial advice. Might not be a bad idea to be a holder of some Crypto.com for the long haul. The shutdown continues. Let's get into it. I believe this is from the Democratic side.
The shutdown is now in its 24th day. She's got like 8 homes. And
so do you.
And the shutdown will extend.
Massachusetts, California, Colorado,
Can I read this, please?
Cincinnati.
The shutdown is going to extend in next week. The Senate has left town for the weekend without a deal. Why even stay after yesterday? You can't even pay the federal employees. Joining us now for the latest, Senator James Lankford of Oklahoma. He's vice chair of the Senate Republican Conference. I watched the explanation on that, and it's just
tortured.
Trump is a bad person. Is all that was the answer to why
all
we
it
can't
ever
pay
is.
the federal
Well,
employees.
I think specifically they said they didn't trust Donald Trump to
Well,
pick and choose
what if you
who-
pay? So what if you pay half of them? Is that a horrible?
Pay as many as we can. We should be open.
Fetterman said straight up, how can you vote against
Paying people that work.
who
I'll
we are
tell you how you
requiring
can.
to work?
Well, they did. Right?
They did, and that's been the challenge we've had along. We said over and over again, 13 times we've had a continuing resolution where we've got to the same moment. In the last 13 times, we voted to say, okay, let's keep negotiating, let's keep it open on it. And Democrats this time just say they're mad at Trump, and so they're not going to do it at this point. And the crazy thing is they keep saying, well, this is about healthcare piece. Well, in 2013, as folks recall, Republicans were mad about Obamacare. We were pretty clear about it, and we had a big government shutdown. It was shorter than this one, and Democrats at that time said, we will not negotiate on health care while the government is closed. Well, now it's literally the opposite on it, that we're saying we're not going to negotiate on health care. Health care is incredibly complicated. You can't do it while people are not getting SNAP benefits, people are not getting paid, air traffic controllers aren't getting paid. Well, you can't sit there and say, we'll do this little tweak, and that's going to be enough. It's not enough. So let's actually have a real conversation about all these issues, but not while there's a shutdown.
Couldn't we have been involved now in negotiations if we had done the CR 3 weeks? How long was it? 3 weeks?
Yeah, 3 weeks, more than 3 weeks.
If we had done it 3 weeks ago, we'd be well into the appropriations negotiations for doing something by November.
So we
now it's almost too late to do anything.
It is. So we brought 3 appropriation bills that we'd already passed in the Senate and said, let's conference these with the House. And Democrats said, no, we're not going to do anything at all. We brought the defense appropriation bill, and they said, nope, we're not going to discuss defense on this. We brought up, let's pay federal workers at least. Let's do that. And they're like, nope, we're not going to do anything.
And they've done the defense bill every other time.
We've done the defense bill.
And it was 27-3 to get out of committee.
The three bills that we'd already passed that we were sitting to conference with the House, all passed unanimously. I mean, these are not controversial. This is just them digging in and saying, literally, we're not going to do anything. We're not going to pay anybody. We're not going to do anything.
Where's the off-ramp? Because at this point, you're talking about air traffic delays, planes that were grounded, not only here in Newark, LaGuardia, I think somewhere else, too. It was Houston, Reagan National. I mean, this is the pain point where people who are not following along on a daily basis are just going to get mad about this. How does this break? How does this end?
So some folks literally are saying, I'm not affected. I don't feel it at all. Anyone who's flying right now, that's in the back of their head on it right now. Anyone who's a federal employee, I would tell you, the federal family, I know, both the husband and the wife both work for a federal agency. She is pregnant with their first child, and literally neither of them have a paycheck right now. That story's repeated all over the country. This has a very real effect for a lot of families on it, and I know the Democratic whip in the House said that families are going to have to suffer, so we have leverage. But I just don't agree. They had nothing to do with this. I have a bill that I put out last year. We literally had 57 votes for it that would end government shutdowns forever. Let's just take it completely off the table. So
that's the right way to do it, so nobody has this.
Correct. It's a total disarmament on it, so we can't do it, and it's very simple. It just says if we get to the end of a fiscal moment like this, and we'll have another one like it, we have an automatic continuing resolution that kicks in, but members of Congress can't travel. We're in session 7 days a week. There's a vote scheduled every single day, and you can't do any other bill other than appropriations. It literally just locks you in the box and says, Congress, finish your job, but the American people are held harmless with it. So put the pressure where the pressure should be on it, and don't have federal workers and everybody flying public and everybody wondering if members of the military are getting paid. That's ridiculous, and it improves our image on the world stage. It shows we can actually get stuff done.
If you believe, and I do, but if you believe what Senator Schumer's true motivations are, and he's got issues, he does. He has issues with the left flank and him being challenged. So he's got political issues. But can you tell me exactly what Democrats actually do want? Because Leader Jeffries is going to be on, and I'd like to ask him, tell me exactly what you do want. Do they want the 1.5 trillion with all the bells?
That's what they brought.
Yeah. That's what they brought. Do they really want that? Do they want a backroom deal, which that's what people say, between Senator Schumer and the president and Senator Thune and Mike Johnson? Do they want an extension of all 10 years of the Obamacare subsidy for $345 billion? Do they want 1 year for whatever it is, $40 billion? What do they want? What do they want?
All of those they've asked for. All those asked for.
But what do they really want for us to do that?
It depends on who you ask. There are some that are in the Democrat Senate that would say they're never going to vote for a single extension for anything because they need to show their resistance to Trump. This is all about showing their bona fides being on the far left.
You watch those. I mean, I watched some of the No Kings thing, and I mean, Fox makes a living of going and asking the people, what is it? Why are you here? And not one person really could say anything except Orange Man Bad. That's really all any of them could say.
Orange Man Bad.
So it's just a show of resistance. But there's nothing on the other side of the
different opinions. I mean, they have.
They do.
Well, this East Wings,
they do.
This demolished East Wings not helping.
I get it. But the funny thing about this is they're going to say, well, we have a strong difference of opinion on it, so we're shutting the government down. Well, we had a very strong difference of opinion with President Biden on immigration policy.
Right.
Yeah.
We never shut the government down on President Biden. 13 times we had a moment like this in his presidency. We didn't do this to all those folks that were unaffected. So the key thing that we're trying to be able to drive here is let's keep the government open while we're negotiating. It's a big shock. Republicans and Democrats don't agree on things.
Right.
But why are we punishing people that shouldn't be punished for it in the meantime on it? And the healthcare piece on it, they've been all over the place on what they're looking for. And they're finally coming back out and saying, well, okay, let's just do 1 year. Your latest piece there, let's just do 1 year. And our basic question is, okay, well, let's talk about this. In my state, the Affordable Care Act and all the folks that are on that healthcare program over the 6-year period, the premiums went up 200%. At the same time, commercial insurance went up 29%. There's a structural problem there. The more money we dump into it doesn't fix the structural problem. And for them to just over and over again say, just give us more money, just give us more money on it, doesn't fix the real issue that's there. And so this is not as simple as just throw more money at it and that's all we need. Yeah. It's a real problem.
So what maybe we'll play a soundbite of what you said for Leader Jeffries or something. I don't know how do I ask him, or Becky ask him exactly what it is? I guess it's just
I think
say, what do you want? What will it take to get?
If his ask is just to be able to extend the premiums, which again, this is not about the Obamacare. The basic Obamacare is still there. This is above and beyond. This is something they tacked on during COVID, saying, hey, it's an emergency for COVID, so we need
but
even
Becky
more
points
money.
out it's a way they did it for budget constraints, like the same way that the Republicans
Well,
did.
if you actually read the text on it, it says temporary medical emergency addition.
But it helped with the budget
Correct,
too.
correct on it. But yeah, it was a thing they had, but it expired at the end of this year. So I think the key things is there fraud in the program, on the bottom part of the program? Because there's no doubt there is, that money is going to insurance companies, to people that don't even know they have the policy.
How would you
but it
attack
helps
the
insurance.
fraud? I mean, do you
The
hire
most
more federal workers?
The
to
most
look
simple
through it?
way to be able to do that is to be able to put a premium cost at all, even if it was a $20 premium. When it's a zero premium, an insurance company can contact somebody and say, you want free coverage on something. They sign them all up for it. They don't even know they have it. They don't use it. We have a very high percentage of folks that don't use that low income stuff. So put some kind of premium on it, and immediately.
Is $20 a number you'd actually agree with?
Not negotiating with Hakeem today, but I would say, yeah, there has to be something that's there. So it's not just a zero piece. And even the Obamacare original wasn't a zero.
Yeah,
that was added during COVID to be able to do that. The other end of it is they've got folks that it's uncapped on the top.
Yeah.
You've got people well in excess of 400% of poverty that are getting subsidies. You've got folks that make $150,000 a year that are getting Affordable Care Act subsidies. Well, that would tell me it's actually not affordable. So we don't want uncapped on it. We definitely don't want fraud on the bottom of it. I would say a lot of Republicans are saying this was designed to be able to go around Hyde protections, the way that it was shaped as a tax credit piece going to insurance companies, so that they could have elective abortion funding going into this fund without it having to hide protections. That would be one of those other issues. Say everything else has hide protections. Why did you create something intentionally to be able to go around it? And then we got to deal with the real root cause on this. Why is the Affordable Care Act, why is that particular thing on the marketplace 200% increase in commercial insurance, 29% increase?
What was the time period on that?
6-year time period, 2013 to 2019. That's just in my state in Oklahoma.
Yeah.
Oof. Oof. Tola, thank you so much for the super sticker. As always, man, always got my back. I appreciate you guys. Check out our new website. You're going to want to go there for all of your crypto updates and everything. We've got our newsletter. You can check it out. It's free, guys. It's free, right? You can go through the recaps of the week. This is amazing, guys. This is amazing. All the recaps of the week, everything that's happened, a look ahead. You can also go to our insights as well. Check it out. Things we've been discussing over the week. Avantis, we've covered that a lot. Zebek, Asteer, to name a few, guys. You're going to want to check it out. Again, it's free. The link is down below. Go check it out. The link to our Patreon there is there. The link to Pico and LFG is there as well. All of our training courses are free. Our videos. Also, check this out, guys. 2 things you need to be aware of. The journey to Jasmy. Rob sits down with Hara from Jasmy Labs. I'm going to Japan next month to meet with Hara to interview him, and I'm doing a 2 to 3 part mini documentary series on my visit to Jasmy Labs. You're going to want to be there for all of it, guys. Also, the latest episode of Blockchain Buzz, every single Saturday at 6 p.m. We bring together 3 of the top voices in the crypto space. They're always random YouTubers that come together. You never know who's going to show up for an unfiltered roundtable on everything shaping the blockchain world. You can watch the episode here. Last weekend we had the Crypto Otaku, we had Rule Black, and we had Believes Crypto on the channel, guys. The always controversial Believes. So you're going to want to check that out. Tomorrow is our next episode. You're not going to want to miss it, guys. Check it out today. The link is down below. You can use the QR code on the top right-hand corner of your screen as well. And I will see you guys later. I got some coaching calls to do over on the Patreon, so also get over there. Book your coaching calls as well. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.